To a recession. We are 8 minutes away from our Q2 GDP figure. We're going to analyze exactly how this could affect the crypto market. Are we going to tumble down into what is a technical recession? Despite the White House trying to play games with the definition. If you haven't watched my quick summary from earlier today, you guys can go watch that as well, just to make sure we know what to expect from this market. I also include what the White House just said already, trying to almost preempt that we're going to be negative and trying to cover their backs, which is very interesting. Thank you guys for joining the live stream. Don't forget to smash up the like button and subscribe. Do check out the affiliate links in the description if you want to support the channel. We got a big day today. Not just GDP figure, which we're going to have up, but don't forget you've got Pfizer and MasterCard shortly before the earnings. After this GDP figure, we might get Janet Yellen, which I'll stay on if she does come to speak. Amazon, Apple, Roku, Intel after the close today. So a lot of data still here for us to absorb. You can see Bitcoin is pretty much hovering around those levels again, right? Still sitting there at around the 23,000 level here. And we just need to monitor what is going to happen from here. Are we going to continue and start heading our way to the upside, or are things going to get a little bit worse from here on out? So lots to keep an eye out on. Thank you guys for joining me. Do smash up the like button as you enter. Let me know if we have any technical issues as well in terms of audio or video. And I'll try to bring you this data as accurately as possible. We also got Bloomberg on this side. Let me know if you guys can hear this clearly. Do you need more volume on that?
So endemic COVID is not
Can you hear it now?
pandemic, it is not pandemic. And if you notice when President Biden, who's 78 years old and frankly appears a little frail, gets COVID after being vaccinated and boosted twice.
Can you still not hear it? Let me know, guys, if you can hear this or not. Perfect. Cool. We'll leave it at that volume for when we need it.
Historically, you start off with a pandemic which kills everybody, and not everybody, but many people, and then it decreases.
It's pretty much on max now, guys. There you go. That's full max now. Hopefully you guys can hear it.
Get your vaccine. You've been previously immunized. You have a baseline of immunity. You do better.
What do you say to the critics of Dr. Fauci?
Well, Fauci got some things wrong. Let's just say it. Fauci said it would take 3 to 10 years in order to vaccinate. They're very delayed in admitting that previous...
Cool. So we'll leave that there for now. We've got a couple of minutes. What we're going to do is we're going to have to keep the page open here for the release and keep refreshing here. So this is where we're going to be to find out what we get. Remember, it's minus 1.6 before. Another negative will confirm a recession. Anything positive, I'm expecting the markets to rally on that news. Anything less, we could see a fall down here on crypto. Crypto's just hovering just under 22,000. I'll also keep the SPY open as well, so we can take a look at that. Let's get that open for us as well. So what we'll do is on the left-hand side, we'll keep Bitcoin. On the right-hand side, we'll keep the S&P because we know they're correlated. Big run up yesterday after the Fed meeting. As we know, Jerome Powell showed no backbone, right? And the market takes that in its stride and says, yep, we'll have that. If you're not being strict with us, we'll continue to run. But let's see what happens today. These are 5-minute charts we're looking at here. Let's just get zoomed in, and you can see Bitcoin just having a little bit of a dump here, heading into the announcement now, just 5 minutes away from getting this GDP announcement. Looking forward to it, guys. Do smash up the like button if you've entered this live stream. If you appreciate this type of content, let me know. Also, not to forget, let's take a quick look at the estimates. The St. Louis Fed, their estimate is 4.1. They're very dovish. They're saying GDP is going to come in at 4.1 or positive at least, right? So interesting. And then your Atlanta Fed, which is the other one that the markets look at, is saying we're going to be negative, just shy of -1. So maybe minus 1.1, minus 1.2. Those are the kind of levels we're looking at here, as you know, from according to the Atlanta Fed. So 4 minutes to go now until we get that GDP figure, and a lot's going to weigh in on this, right? We need to keep an eye on the dollar index. We've got to keep an eye out on how the markets react. We've got to look at bond yields, and therefore, obviously, how does that affect crypto? So you can see here on Bitcoin, just here calling off again. Remember what I said yesterday, if we don't get that close above 24, I'm not excited in terms of a long, right? We're forming a huge head and shoulders pattern here as well, on the hourly and 4 hourly, depending on how you want to look at it. This will be your left shoulder, this is your head, this is your right shoulder. If we get rejected from this level, and if we come back to the neckline at about this kind of trend line going diagonally here, we could be forming that head and shoulders pattern, which would not be fun at all. So just to kind of show you where that neckline would be, is like kind of there as your neckline for the big head and shoulders pattern. You saw we called this small head and shoulders patterns correctly. I can go ahead and delete that because we called that pattern perfectly to the price target here. So congratulations if you took that. And now we're just looking at this big head and shoulders pattern from the new line I've drawn. Are we creating this as a head and shoulders pattern, or can we push on past 24? It's going to depend on this news, which is really, really important. Okay, so let's also take a quick look, whilst we've got 3 minutes here, at the Fed rate monitor tool. Remember, we don't get the next FOMC meeting until September 21st, and the market's priced in just a double rate hike of 50 basis points, okay, which is interesting. Now, why is this important? Well, you've got a huge gap here now from the 28th of July, which is where we're at. You've got all of August and pretty much all of September for the market to decide on a trend direction. So based on this GDP figure, plus all the other data, which we've got to study, so we've got loads this week, right? So you've got all the traders trading. Let them trade, right? If you're an experienced trader, you guys trade as well. I've done that before in the past. I continue to do that. But for our long-term portfolio, which is what I know the majority of you care about right now, we want this data to settle. We need to digest it. We've had all these companies' earnings. We've had projections. We've had some people do good earnings. We saw Facebook Meta yesterday tank after earnings. We've got the FOMC rate hike yesterday, which has good and bad news. Good news in the fact he didn't rate hike too much. Bad news in that he's not aggressive enough. Then you've got the GDP figure, which we're waiting for now. So the market's going to digest all this and decide on a trend direction from next week. So I'm not in a huge hurry here, right? I turn a little bit bearish when bullish when we get a close above 24,000, and I'm happy to take a long position up towards that 30k mark as a long. I think that's a good risk to reward trade. But in terms of other things, if we get a red side, I'm expecting us to fall back into our bear flag and start retesting that 20k level, maybe even breaching that level back down to the bottom of the channel at 19,000 here on Bitcoin. Those are the levels I'm looking out for. This green channel here sitting at 18,800. I mean, we're going to get thrown back into here if we get a horrible reading on GDP. Now, one thing is, if it's negative, the market's going to want to look at how negative it is, right? Because if it's close, like minus 0.5, something like that, remember, it can get revised, okay? Because these are preliminary GDP readings, so it can get revised. Right, 1 minute, I'll stop waffling so we don't miss this. Guys, do smash up the like button if you appreciate this type of content. Bringing it to you live when it's not so attractive to sometimes bring these macroeconomic pieces live, right? It's easier for me to go, oh, look, here's a 100x coin, which we can look at. But this is the stuff that moves the markets. Floating high, appreciate you, buddy. Hopefully you guys can hear okay. Let me know if you can't hear my audio very well. But you guys should be fine. Let's have another refresh. Just don't want to miss it. We're probably 30 seconds away now. Oh, look, temporary unavailable. Their website's gone down. Great. Their website has gone down. Oh, we're up. Minus 0.9. We're officially in a recession, guys. Officially in a recession. Two negative quarters. Let's tweet this out, guys. Please go and retweet it. Quarters of GDP. Q2 GDP minus 0.9%. Officially in a recession, despite what the White House says. Go retweet that, guys. Right, there you go. We're officially in a recession. Let's see how the markets are moving here. You got S&P tanking, Bitcoin, big red candlestick here, as you would expect. And doesn't look like we're going to get that 24,000 breakthrough. And this is why I was suggesting to you guys, be very, very calm. We've got loads of data coming out, loads of things going on, and we need to stay cognizant of this. It's really, really important. Great stuff. Thank you, KTK. Appreciate you. Good stuff. Audio's fine. Great. Good stuff. Cool. So let's switch over to Bloomberg to see if they've got anything interesting to add here.
1.8% in the first quarter. The GDP price index 8.7%, which is no surprise. That's a quarterly number. It's not going to be the number that the Fed is going to be watching. They'll be taking a look at tomorrow's number to find out whether we're making progress or not. The GDP drop reflects declines in private inventory investment, residential fixed investment, and federal government spending. Non-residential fixed investment down a bit, but the increase in exports we saw and the increase in personal consumption helped balance that out, but it is still a negative number, and until and unless we get a revised number, we're going to be looking at this as the second consecutive quarter of contraction, which is not a real definition for a recession, but it is going to be a hard thing for Janet Yellen in her news conference today to talk against. And of course, if you had Senator Cassidy on now instead of 5 minutes ago, he'd be crowing about how terrible.
I think he'd have some things to say.
Terrible
That's for sure, Mike. We've got to move to the front end. We're down 8 basis points on a 2-year, 292. I think you can all read between the lines here. There's a belief that we've got some weaker data. The Fed has to back away even more. The 10-year yield down by about 3 basis points as well. Equities were negative. They're much more so now. We're down 0.5% on the S&P. On the Nasdaq 100, we are down by 0.9%. Mike, you know what the rest of today's going to be like. Is this going to be a political debate or an economic one?
It's going to be a political debate. It could be an economic one to the extent that it tries to inform people, or people on Wall Street try to decide what it means for the Fed. But I don't think it means a whole lot in terms of the September meeting, because that's September 21st. We're a long way away from that, and much could change between now and then. But it is going to be a political debate, because obviously one party is going to accuse the other party of running the economy into the ground. And that's
very interesting, guys. So that's where we're at. We're officially in a recession. White House will play its political games now going into the midterms. We don't need to worry about that as investors. What we need to focus on is what's going on in the markets. You can see Bitcoin now curling over, right? Did not get that higher high here at 24,000. For me, that indicates this is going to be a struggle now. I don't know where the bulls are going to get the energy to go and push above that 24,000 level now. So for me, I'm looking now back at getting it back into the flag and back into that channel to see whether there are opportunities to dollar cost average. That's what we're looking at here right now. You can see S&P continuing to fall here. Bitcoin 22,687 now here on the chart, and giving up pretty much some of the gains from yesterday, right? It's a roller coaster, and don't expect this to finish. There's still other things that are going on. No doubt Janet Yellen will come out. No doubt other things will come into play. You've got still some earnings after the close today. It's a yo-yo, you know. Later on, Amazon and Apple could give some really good earnings, and we can start going back up again. So just keep it with a pinch of salt. Hold back. Wait for the information to be digested. This is really important, because let this week finish. Maybe even tomorrow they're going to start digesting this earnings and saying, okay, what is going on? What data have we got this week, and what do we want to do from here, right? Because between, like the chap said there on Bloomberg, huge gap until the 21st of September here, and the market needs to pick a direction it wants to head into between now and then, or is it going to choose to channel? That's the boring option. Is does Bitcoin just go 20k to 24k, 20k, 19k, 23k, just keep doing that for the next 6 to 7 weeks, which would be hugely boring, but is that what it wants to do here? Look at that big wick down here on Bitcoin, now getting bought back up slightly here, sitting at 22,800, holding up better than I thought. Again, the market's kind of priced it in. They kind of expected that negative figure, which is why it's not a crazy huge shock. They kind of absorbed it a little bit there, which is good. Let's also take a look at the dollar index if we can. It's important to look at that. Let's take a look at the dollar index, if I can load that up. So as you can see, dollar index sitting at 106 here. Again, dollar index is creating this double bottom, right? So the question is, are we going to get a double bottom and this start running over the next couple of weeks? That's what we're looking for. I mean, we can focus on it now, but what I want to look out is, what does this look like over the next couple of weeks? Is it going to start running? Can it build some strength and start bouncing back? Because this is inversely correlated to Bitcoin. Remember, if the dollar index starts getting a bounce here from the 200 moving average and starts working its way upwards, that can mean a bad trend duration here for Bitcoin. So that's something we need to keep an eye out on here. So negative GDP, officially in a recession, guys. I'm Probably not going to wait to see what Janet Yellen said. If she says anything interesting, I will tweet it or update you guys over there. Apart from that, we just need to wait to hear, do we get what the earnings from Pfizer and MasterCard are? I don't expect them to move the market hugely, maybe MasterCard, but we expect to beat because Visa beat quite strongly as well, showing good consumer expenditure. But let's see what they say. Other than that, red here, 1%. I don't think it's too bad, right? It's not crazy bad. It just means you've not got your momentum to push you through 24K, and it's just another reason to send us back down into this channel now. So now your question is, if over the next kind of set of 4-hourly candles or couple of days it will take to get to this neckline, do we get that neckline and do we end up creating this bit of a head and shoulders type pattern projected to the downside? That's what we're looking out for here on Bitcoin. So there you have it, guys. Quick update on what the GDP figure was. As expected, we are in a recession. The White House can say what they want. They can play semantics with the definitions. It really doesn't matter. 2 negative quarters of GDP. Jerome Powell yesterday still toothless with his decision to just rate hike at 75 basis points and pandering to the market. And the reality is the market will take brief rallies when he says good news like that. But longer term, they're going to look to the Fed. They're going to look to the officials in charge and say, hang on a second, you're not in control right now. What's going on? You've got 2 consecutive quarters of negative growth. You're downplaying it at every corner. You said we're not in inflation. It's transitory inflation. You then have to admit you're wrong and you wouldn't do that again. Now we're in the recession and you're saying, no, we're still trying for a soft landing and playing around with definitions just to appease your voters ahead of a midterm elections. All of these things are things which the market needs to digest. And for crypto, this is a very difficult environment for crypto to get any source of momentum. And it's not crypto based, right? It's not crypto's fault. Like, I can openly and honestly come onto here and say to you guys, it's really bad when crypto does not make progress, and we're seeing people still do rehypothecation, still trade with really high leverage, still take degen plays with the likes of Celsius, 3 Hours Capital, Terra Luna. That's bad for crypto. But what's going on right now is just bad for the macroeconomy, and it's a risk-off environment, which makes things very difficult for Bitcoin to sustain any move to the upside when all this macro data continues to pull crypto to the downside. So if you appreciate this type of content, smash up the like button and subscribe. Do check out the links in the description to BYBIT and BitGet. OKX is the exchange I'm going to be using a lot more for our long-term portfolio, so make sure you've got that set up, so when I share the strategies, you guys are ready on that. You're not going to want to miss them. We're going to have some really good pie strategies around long-term investing and dollar cost averaging. So I'm going to definitely give you guys more content around that. Don't forget to smash the like button and subscribe, and I'll see you in the next one.